Hey, what's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money from my subscribers, so please be careful. Don't get yourself scammed. Be careful on Instagram. A lot of scammers over there as well. My Instagram username is Richard Fain Millionaire Mentor. So if you guys do want to follow me on Instagram, that's okay, but just be careful when you go over to Instagram looking for me. Click on that link down in my description box of this video. That's my real Instagram username. There are going to be some fakes out there, so please don't get yourself scammed. I got an email from a young lady yesterday who said, "Hey, Richard, I've been communicating with someone on Instagram and I don't believe it's you." I said, "Well, you would be right. It's not me." And she sent me the whole, chat they had together on Instagram, and it was a scammer. So all I'm telling you guys is be careful out there with scammers. I'm not going to ask you to send me money to invest for you. I'm not going to try to get you to set up some type of crypto account, some type of day trading account, some type of Forex account. I'm never going to do any of that stuff, guys, because I don't do any of that stuff myself. I don't talk about any of that stuff in my videos. Why then would I slide into your DMs and start talking about stuff that I don't talk about in my videos? So please be careful out there. This is, especially with the surge in Bitcoin and crypto, all of these scammers are awakened. And now all of them are pitching all of this Bitcoin and crypto crap because of what? Bitcoin is going through the roof. Crypto is going through the roof. They know people want to, they don't want to miss out. What do they call it? FOMO, fear of missing out. They know a lot of FOMO is out here with this Bitcoin and this crypto stuff. So a lot of the scammers are targeting you guys because they believe you're easy targets, because they're going to come at you and say, "Hey, you see what's going on with Bitcoin? Don't miss out. We're going to help you make a lot of money." It's a scam. So please be careful on Instagram and in the comment section of my videos on YouTube. If you're following me on Facebook, same thing. Same things. TikTok, same thing. So make sure you're communicating with me on any of those platforms so that you're not scammed. Please, guys, do not send these people money to invest for you. Never. Nobody. Okay? If you want up to 15 free stocks, Moomoo is going to give you up to 15 free stocks when you open a new Moomoo brokerage account. They're going to give you up to 15 free stocks for just trying out their brokerage app. I use the Moomoo brokerage app. See, I'm talking about it in my videos. That's how you know it's real and it's me. And I use it because I talk about it in the video. I'm not going to slide into your DM and go to talking about Moomoo, but I never mention it in my videos. See, that's the difference. I mention Moomoo in my videos every single day because I use the brokerage app to buy my paper assets to build wealth. That's the difference, right? So if you're interested in that Moomoo offer, rocking with me, using the same brokerage app that I use to buy my paper assets to double my net worth in the next 10 years, go down to the description box, click on the Moomoo link, open up your new brokerage account today. You put $100 in that brokerage account, they're going to give you 5 free stocks. You put $1,000 in your brokerage account, they're going to give you 15 free stocks. See, guys, that's real. I'm telling you in my videos, that's real. This is not sliding into your DMs or into your Facebook DMs or your Instagram DMs or down in the comment section of the videos. No, this is me telling you this from me. You see my face, you see my mouth moving in my videos. That's real. Anything else people come to you with, it ain't real. The only thing I ask you guys to rock with me on or consider rocking with me on is moo. That's it. Nothing else. I don't pitch anything else to you guys. So if you don't hear me talk about it in the videos, it's not me. Please. Now, if you want the moo offer, like I said, go down to the description box, click on that moo link, open up your moo account today, and then send me an email. Once again, guys, I'm talking about it in the video. My email and my only email is in the description box of my videos. There is no more emails. Oh, Richard, somebody sent me an email from this email. Guys, that ain't my email. My only email, my only Instagram, my only Facebook, my only YouTube, down in the description box. Anything else is a scam. Anything else is a scam. Email me, let me know you've opened the moo account and you want to copy my 10-year wealth transfer blueprint where I'm buying 3 big boy blue chip paper assets that I believe, here's the key, guys, I believe will double my net worth in the next 10 years. I'm not some CFP. I'm not some licensed financial advisor. I'm not a CPA. I'm none of that stuff. What I believe. Well, Richard, how do you believe that's going to happen? How do you know it'll happen? Well, I don't know it'll happen, but I know for 25 years I've been doing the same thing. I don't know. Maybe it works. Maybe it don't. I don't know. 25 years, I built my wealth doing the same thing I'm telling you guys in these videos. So something worked. Something worked. So all I'm saying is I ain't got no crystal ball. I can't tell you it will work 100% or guarantee anything to anybody. I can't guarantee that to myself. But one thing I will guarantee you. One thing I will guarantee you. If you sit yourself on that sideline and don't do nothing, this I will guarantee you. You will not build wealth. How about that for a guarantee? There's a guarantee for you. Sit yourself on the sideline, be afraid, be scared, let the 1% keep you in the matrix. You won't build wealth. You'll work for somebody for the rest of your life. And then they'll give you Social Security. That's it. That's what you're looking forward to in your golden years, unless you actively do something to change that. That's what's waiting on you. That's what's going to be in your end of the rainbow scenario. It's going to be Social Security, a couple $1,000s a month. That's it. So the only way you change that, guys, is you got to do something compelling right now. Oh, I'll do it tomorrow. Next week, I'll do it. No, because next week turns into what? Next year. That's what next week turns into. Next week turns into never doing it. And then 10 years from now, you'll be like, golly, I saw that guy on YouTube 10 years ago and he told me about this wealth transfer blueprint, and goodness gracious, he's in the Caribbean on his own island with his own with his house in the Caribbean, just like he said he would be 10 years ago. How did he do that? Well, I took action. I took action. Nothing fancy, just taking action. Opened my brokerage account and said, you know something, I ain't got a bunch of money, but whatever money I got, I'm putting it in here to double it, triple it, quadruple it. And I'm going to be consistent. I don't care if I got $100. I'm going to be consistent with that $100. And I'm going to be patient. And I'm going to do that month after month, year after year, until I get to the pot of gold at the end of the rainbow. That's what you got to do, guys. If it was easy, everybody would be wealthy. There's a reason only 1% of the people in America control 99% of the wealth. Why? Why is that? Somebody in the chat tell me, and then we're going to get to the meat and potatoes here in a second. We're going to get to the meat and potatoes here in a second. I know that it was clickbait. It's clickbait. See, I got you. It's clickbait. No, it's not. We'll get to the meat and potatoes. See, that's the problem with a lot of us. We got no patience. We got no patience. We'll get in a video in 15 seconds. We like a gnat. We gone. No, have some patience. We'll get to the meat and potatoes, but I want to get you to understand what all of this is all about. All of this we do today, and I do every day on this YouTube channel, is about one thing: getting you to your pot of gold at the end of the rainbow. That's it. That's it. All of this leads to that. So be patient. Be patient. Develop a level of patience in your life. Stop being so in a hurry to go nowhere. All of us are such in a hurry to go absolutely nowhere. Slow down. Have some patience. Think about really the real reason why I do this every day is to help you give your golden nuggets, to help you get to your pot of gold at the end of the rainbow. That's it. That's it, guys. That's the only reason I do this every day. I know you can do this, but it doesn't matter what I know. What really matters is you believe you can do this. That's what matters. Don't matter what I think. What matters is what you think, right? So, having said that, I appreciate your patience. Now, let's get into the meat and potatoes. First thing on the agenda we got to talk about is the CPI inflation report for February. It wasn't a stellar report, guys. It appears prices of our goods and services went up year over year and month over month. We're going to talk about that. Let's dive into that report right now. And again, guys, this is about giving you critical information that I believe is going to help you become a better investor. So whether you want to listen to this or not, that's on you. You want to click in and click out and go find your entertainment and not worry about what's happening to the goods and services that you're paying for every day. Because I'm going to tell you what's happening. They're going up in price higher than your wages are going up. Guess what that means? You're not going to even be able to. Sorry about that, guys. I'm about to click out for a second. What that means is the prices of your goods and services are going up higher than your. Guys, are you there? Somebody let me know in the chat that we back on page here. Can everybody see me? Can anybody see me? Y'all let me know if you can see me or not. I apologize about that. I guess this raggedy internet I gotta get my internet going. Can everybody hear me? Okay, good. Looks like we're back. Sorry about that, guys. I have no idea what happened to my internet. It just went out for a second. So my apologies there, but let's try to get back on task. Again, we're going to go through the CPI inflation report for February. And then we're going to work through why prices went up. And that's important, like I said, because our wages are not going up as fast as prices. And that's a concern. So let's dive into the CPI inflation report, and then I'm gonna give you my take on what we should be thinking about doing in order to keep ourselves out of the weeds, right? So inflation rose again in February, keeping the Federal Reserve on course to wait at least until the summer before starting to lower interest rates. So that's important, guys. That little sentence right there is important. Because the Fed, the Federal Reserve, who monitors interest rates, they take interest rates up, they take interest rates down. They are trying to see if inflation will stay down and continue to go down without them having to raise interest rates anymore. If that happens, guess what's going to happen? They're going to go ahead and lower interest rates. So keep that in mind. Keep that in mind as we read through this. It's all about the Federal Reserve having confidence that inflation is going down. And they raise interest rates to keep inflation down. Guys, can you hear me in the chat? Somebody give me a thumbs up if you can hear me. Is my audio bad? Okay, there's some people out here just messing with me. My bad. Okay, let's keep rolling. As long as you guys can hear me pretty good. I know we got some trolls in here, but let's get back on task here. So my point here is this. If interest rates stay the same and inflation continues to come down, then the Fed will be more inclined to reduce interest rates, right? So that's why this CPI inflation report is important, because one, it tells you what's happening with the prices of your goods and services that you got to buy to survive and live. And then it also gives the Federal Reserve the ability to be able to reduce short-term interest rates at some point. So keep that in mind. All right. Now let's keep moving here. The Consumer Price Index, a broad measure of goods and services costs, increased 0.4% for the month and 3.2% from a year ago. What does that mean? That means month over month, the prices of our goods and services, which they call headline inflation, went up by 0.4%. So prices went up month over month. Year over year, they went up by 3.2%. All right. Now, the monthly gain was in with exception, but the annual rate was slightly ahead of the 3.1 forecast. So what happens is these economists, they have a forecast, right? Their forecast for inflation or goods going up could be 0.3%. But if it goes up 0.4%, we missed expectations. It went up higher than we expected, right? Same thing with year over year. We came in at 3.2%. Prices came in at 3.2% year over year. But the experts and the economists thought it would come in at 3.1%. So that means it's going up faster than we thought it would go up, right? So that's all setting us up for what? The Fed reducing interest rates. The better we are at getting inflation down, bringing the prices of our goods and services down, the more the Fed will possibly bring down short-term interest rates, right? Excluding volatile food and energy prices. Let's go down. Now that's what they call core CPI. So headline CPI includes everything. Prices of our goods and services, everything. When you talk about core inflation, they take out food and energy costs because they're so volatile. So you got two types of inflation that we look at. We look at headline inflation, which includes everything, and then we look at core inflation, which takes out food and energy costs. So core inflation, it says excluding volatile food and energy prices, the core CPI rose 0.4% for the month and was up 3.8% for the year. Both were 0.1% higher than forecasted. So core didn't do too bad. It came in still higher than expected, but not too bad, right? Not too bad at all. With the 12-month pace is off, the inflation peak in mid-2022, it remains well above the Fed's 2% goal. So the Fed wants inflation at 2%, guys. And guess what? It's higher than that, right? It's 3.2% from a headline inflation standpoint. And then it is 3.8% from a core inflation standpoint. So both measurements of inflation are higher than what the Fed want inflation at, which is 2%. And that's one of the reasons why they're not reducing short-term interest rates yet. That's one of the reasons why they're not reducing short-term interest rates. But let's go ahead and read a little bit And let's figure out in this report what really caused inflation to go back up, our goods and services to go back up month over month and year over year. A 2.3% increase in energy costs helped boost the headline inflation number. Now, guys, that's definitely true. Have you went to your local gas station lately and saw what the price of gas has increased to? I know I have. I went to get some gas yesterday in one of the cars, and I have to put premium unleaded in it. And down here in Florida, you know, a couple weeks ago, I could get premium unleaded for like $3.58 a gallon. Today, it's $4.15 a gallon. So the energy cost, which includes gas, right? It went up. Food costs were flat on the month, while shelter rose another 0.4%. So shelter continues to go up, guys. Even last month, when we looked at January CPI report, shelter continues to go up, right? So we got to keep our eye on energy costs. We got to keep our eye on shelter. Those are the two right now that are moving upward quickly when it comes to headline inflation. So we got to be real careful there. It says right here, gasoline jumped 3.8% on the month. That's a lot, man. That's a lot. We can see that at the pump. I definitely can. Inflation continues to churn above 3%. And once again, shelter costs were the main villain. Shelter costs. Now, some of y'all might be saying, well, is that my mortgage? No, they're talking about rent. When they talk about shelter costs in the CPI inflation report, they're talking about rent. So rent is still pretty red hot, guys. Shelter costs or rent continues to go up. It continues to escalate. So that's a problem. And it's a problem that gasoline went up by 3.8% month over month. That's a problem, right? That is a problem. So we got to pay attention and watch out for that. Inflation continues to churn above 3% once again. Shelter costs were the main villain, with home prices expected to rise this year and rents falling only slowly. The long-awaited fall shelter prices isn't coming to rescue anytime soon. So they're telling you right there, guys, this notion of, oh, home prices are going to fall when the spring comes. They don't believe that. They do not believe home prices will fall. They actually believe home prices are going to go up. With home prices expected to rise in the year and rents are slowly decreasing. Matter of fact, rents aren't decreasing. They're actually increasing, right? So rents are increasing. Home prices are expected to increase. So what they're telling you there, guys, is shelter costs is not going to get any cheaper anytime soon. So February's aren't going to prompt the Fed into a lower rate quickly. So they're saying the February report is not going to entice the Federal Reserve to reduce short-term interest rates. Now, you know, the Federal Reserve will be meeting on March 20th. This report wasn't good news because you got to think about it now. We got January and we got February CPI reports, and they were not all that stellar. Now, they weren't crazy bad, but they wasn't good. It wasn't to a point where the Fed would say, okay, in March, we're going to decrease. It's not good. It's not even good enough for them to consider decreasing in their May 1st meeting. So we got to pay attention to what's going on with these CPI inflation reports. Now, what everybody is saying out there is June. Fed won't reduce until June. So we got to see. Let's look at some other areas that increased. Airline fares posted 3.6% increase. Yeah. Apparel prices rose 0.6%. Used cars were up 0.5%. Medical care services, which helped feed a higher than expected CPI increase, January decreased by 0.1%. So medical care services actually decreased slightly. The year-over-year increase for headline CPI inflation was 0.1% higher than January, while core was 0.1 of a point lower. Let's talk about what that did to the stock market. Let's talk about it real quick. Markets showed little initial reaction after the news broke, with futures tied to major stock averages as well. Treasury yields slightly higher. So what happens is when this report comes out, this is what investors do. They gauge if it's good news or bad news. Now, if it's good news, the stock market goes up, right? If it's not good news, the stock market kind of just hangs there. If it's bad news, the stock market sells off. But what happens is treasury bonds and the stock market work against each other. So when you get bad news for the stock market, inflation is still going up, the Fed not going to reduce interest rates anytime soon, that's bad news for the stock market. What happens is the bond market goes up. Why? Because see, the bond market and the stock market compete for the same investors in a lot of cases. They compete for the same investors. So when the stock market doesn't get good news, investors they'll flee over to the bond market. Why? Because the bond market works for the same investors, right? The bond market over here went up. It was in the green. It was slightly up. The 2-year, the 10-year, they were both up because of this news. Now, again, the market didn't go crazy. The stock market didn't go crazy. The Dow was down. And when I looked at it prior to starting this live stream, the Dow was still in the red. It was down. But the S&P 500 and the NASDAQ were doing okay. They were in the green. So it wasn't terrible news for the stock market, but it wasn't the news everybody wanted to hear. Everybody wanted to hear that inflation, we beat expectations, it's still going down, and that sets us up for interest rates to come down. And we didn't get that, guys. We didn't quite get that. While the 12-month pace is off the inflation peak in mid-2022, it remains well above the Fed's 2% goal as the central bank approaches its 2-day policy meeting in a week. That would be March 20th, which will be next week, right? Fed officials in recent weeks both have signaled that rate cuts are likely at some point this year and expressed caution about letting up too soon in the battle against high prices, right? So really what that means is right now, this is what the Fed is concerned about. They're concerned about keeping interest rates higher for too long, and that's called tightening, right? So that's tightening. When they're tightening down and not allowing certain money to come into our economy, and when I say certain money, I'm really talking about loans, because when interest rates are low, people can go get loans and take that money from that loan and go buy stuff, which adds to the growth of our economy. They want to tighten that down. That's called tightening. When they increase interest rates, they tighten things up. They make it tougher for people to go out and get money and spend to continue to keep our economy too red hot. Because if our economy is too red hot, what happens? Inflation goes up. When our economy is too red hot, we got too much demand and not enough supply, it increases prices. So the Fed is in a tightening posture right now. They're tightening up. This damn internet is keep going out. I don't know why. I don't know what is going on with the internet today, man. This internet is just going crazy today. Oh, Lord, what is going on crazy? Can you guys hear me? Can you guys see me? Are we there? Y'all give me some feedback here, guys. impossible today. I don't know what is going on with this internet today. Guys, are you there? I know. I'm telling you, man. This internet is. I've never had this happen before. I don't know. We may have a problem in my subdivision for some reason with the internet today. I have no idea. I mean, my internet has never done this, and I do live streams every single day. So I don't know. I must have had it may be something going on in the subdivision. I'm assuming. I don't know. I don't know what's going on with the internet. But guys, can you see me and hear me now? Can you guys hear me and see me now? Can you guys hear me? Can you see me? Can you guys hear me and see me now? Give me some thumbs up to let me know we're back in action. Anybody out there? Give me a thumbs up. Let me know if I'm back in action. You guys can hear me and see me okay. I honestly don't understand what in the world is going on with my internet today. Are we back online? Can you guys hear me, see me okay? Very blurry. Well, I'm gonna do the best we can, guys. I apologize. I have no idea what's going on with my internet today. Normally my internet is great, so it must be something going on with the internet in the subdivision. So we're gonna keep pushing forward, and you guys just periodically, I'll look at the chat. You just got to make sure you give me a thumbs up to let me make sure everything is happening okay. Again, I apologize for the internet. I've never had this problem before with the internet, so I don't know what it is today, but let's keep it moving. As we were talking about the Fed, and we were talking about, you know, they're in a dilemma right now. They're in a tightening position right now. They're in a tightening posture. They're keeping rates higher for longer. And the other thought on their mind is, when do we need to start easing that tightening? So, and basically the tightening is increasing the short-term interest rates to why? To stop people from spending money, stop people from borrowing money, and then spending it on things that, you know, make our economy too red hot, right? Too much demand, not enough supply drives up prices. So they're trying to tighten, right, people's ability to just borrow money cheaply and put it into our economy. So they're trying to do away with that for a minute. And then they're thinking about, well, when do we start easing up on this though? When do we start easing off of the interest rates? If we ease off the interest rates too soon, what happens? Inflation goes back up, right? Inflation might go back up. If we keep interest rates higher for longer, too long, what could happen? People could stop spending altogether and we go into a recession. So those are the things that we're up against, or the Fed is up against. They're saying, okay, on one end, we're not at our 2% target. We are not at our 2% target. So we're not ready to reduce rates because we're not at the 2% target for inflation. I just walked you through what February's report was, right? Headline, 3.2%. All the economists and all the experts wanted it to come in at 3.1%. So we missed expectations. When we look at core inflation, it came in at what? 3.8. We wanted it to come in at 3.7. So we missed that expectation. So those two misses, although slight misses, we still missed. So that tells the Fed, not so fast on reducing rates just yet. We still are not coming in where we want to come in. Over the last 2 months, we've missed. We missed in January on the January CPI inflation report, and we missed on February, right? So we got to figure that one out. We got to figure out what's the happy medium right there. We got to figure out the happy medium. And right now, the Fed ain't figured that out. That's why they're keeping rates higher for longer. They're going to keep rates higher for longer until they figure it out, right? They're going to keep it higher for longer until they figure it out. The good news is they're going to be meeting on March 20th. They're not going to increase interest rates. So that's the good news. We know they're not going to increase it anymore. The bad news is we don't know when they're going to actually start decreasing rates. A lot of people believe that will be in June when they can get, they'll get March, they'll get April, and they may have May's CPI inflation report. So they may get 3 more CPI inflation reports before their June meeting. And that's where most people believe they're going to start reducing short-term interest rates. There are a lot of people that believe they're going to reduce this year by 125 basis points. So the Fed funds rate today is 5.50. So if they reduce by the full 125 basis points, that means by the end of the year, perhaps, by the end of the year, we can be down to 4.25, which would be phenomenal, right? That would be phenomenal. And then in 2025, reduce by another 125 basis points or 150 basis points. And now we're down in the 3s going into 2026. That's how most people see the progression of interest rates being decreased. We'll have to see. We'll have to see. Fingers crossed, we'll have to see. But it's interesting that I was reading an article by, they were quoting JP Morgan Chase. And actually, they were quoting Jamie Dimon, who is the CEO of JP Morgan Chase. Now, JP Morgan Chase, guys, is the #1 bank in America. It's the biggest, it's #1. And Jamie Dimon is the CEO of that bank. And his position was he believed that the Fed would cut rates in June. Would cut rates in June and probably sometime this year, the consensus is, and I'm not saying this is Jamie Dimon's consensus, this is just over, you know, when you look at what everybody is saying, most people believe 125 basis points this year, which means incredible news for the stock market. Because if rates can come down, if Fed funds rate can come down by 125 basis points this year, then I believe the stock market continues to do extremely well, right? It will continue the momentum. That's my opinion. It will continue the momentum, right? So that's what we're looking at, man. We have to pay attention to what's going on, guys, with inflation. It's important. And just like the title of the video said, you know, these prices at any point, guys, could skyrocket. I've already walked you through what's happening with gas, 3.8% increase month over month. I've already walked you through what's happening with rents. They were up 0.4%. Shelter costs month over month was up 0.4%. That's rents. So all these people around here talking about rents coming down and all this other stuff, not according to the inflation report. Not according to the inflation report, rents went up. Shelter costs went up. And they expect home prices to even increase this year. So you tell me, that's still, inflation is still hanging itself around is what I'm saying. It's being stubborn. It's not just going down to that 2% like the Fed wanted to so that they can feel comfortable reducing it. It's not going easily. It's stuck. Headline inflation has been like that 3.2, 3.1. I think it got down to 3% at one point late last year. but it won't. It doesn't seem like it'll go down any further. So that's a problem for the Fed. That's a problem for them feeling comfortable enough to start reducing short-term interest rates so we can really see assets start climbing again. That's why you see the bond market or treasury bonds doing so well today. If you looked at the treasury yields, at least early this morning, if you looked at the treasury yields, they were all in the green. Pretty much. The 2-year, like I said, the 5-year, the 10-year, all of them were pretty much in the green, going up because of this information that people got from the CPI inflation report for February. That's the reason the bonds were up. Again, bond market or treasury bonds and the stock market compete for the same investors, guys. And a lot of these investors are institutional, hedge funds, Wall Street firms, billionaires that are in the market, in and out of the market. So you get a lot of those. 75% of the activity in the stock market is made up of these large investors, these institutional investors, these large hedge funds, these Wall Street firms, these billionaires. They make up 75% of the activity. So when you see large swings in the stock market, that's those people taking some of their money out and putting it over here in the bond market for protection because they're not getting crystal clear signals from the Fed when they're going to reduce rates. That's what's happening with that. But we got to keep our eye on it, right? We got to keep our eye on what's happening with inflation. That's important. That's a key piece of us building wealth. Now, right now, since I'm on a 10-year wealth transfer blueprint, I'm not concerned about it because I want to be able to continue buying these assets at a slight discount. They're not heavily discounted like they were in 2022 or early 2023, but I think they're still discounted somewhat, right? I think they're still discounted. I still believe what I pay for my SPLG or my FTEC today is going to be a bargain compared to what it'll be worth in 10 years. That's what I believe. So when I'm watching what's happening with the CPI inflation report, the reason I pay attention and watch so that I can become a better investor. So I'll know how to move my money in and out investments and where to put my money. That's why I want to know what's going on with the CPI inflation report. That's why I want to know what's going on with inflation at all, is so that I have that data to be able to become a better investor, if that makes sense. So we got to pay attention. You know, earlier in the month, we had the jobs report. That was another big key to what we're trying to get accomplished as investors, right? That jobs report is critical because we've already heard the Federal Reserve say they want the labor market to soften somewhat so that they can continue that tightening, right? They want to keep tightening down the economy so that it doesn't grow too fast and we don't have enough supply to keep up with that demand, which increases prices, which causes inflation. That's how it happens, guys. So the Fed has a method to their madness. The reason they're doing what they're doing is so that inflation will stay down, so that they can have some type of price stability in our economy, so that just not the 1% can live a good life and participate and do the things they want to do. See, only people can do that now is the 1%, but they want the 99% to be able to do it too. And the only way that happens is if they have price stability in our economy. That's why you're going to see rates higher for longer. That's why you're not going to see them reduce rates until June. And we got to keep our fingers crossed that when we get the March, April, and May CPI inflation reports, they show a positive trend of inflation continuing to go down. If they don't, then I don't believe they'll reduce interest rates in June either. And at that point, investors are going to start getting antsy. And you may see the stock market start tapering off, the momentum dying, right? Because right now, most investors believe June is the month they're going to start reducing. So you still got a lot of optimism. You still got people who are willing to bet on the market because they believe rates are coming down. They're still willing to put their money into the market because they believe when rates come down, it's going to stimulate the market. It's going to take it to the moon. And that's why they're willing to still invest right now. But if it gets to June and the Fed says, you know something, guys, we're just not happy with the progress of inflation coming down, we will have to revisit this in 2025. That's it. You're going to see the market sell off, right? You're going to see Bitcoin drop as well because Bitcoin piggybacks the stock market. You're going to see that happen. So that's why it's important for you guys to pay attention and know what's happening here with these reports so that you know, okay, I understand what's happening with the Fed and interest rates and how interest rates and inflation plays into my strategy of building wealth, right? If rates come down, the stock market goes up. That's the way it works, right? They work opposite of each other. Rates go up. What happens? When rates go up, stock market goes down. When rates come down, stock market goes up. Why is that? Because the stock market is made up of companies, right? And most of those companies need to borrow money at some point to expand and to grow. When money is cheap to borrow, low interest rates, more companies will borrow and more companies have the ability to expand. If they can expand, they can create more revenue. And if they can create more revenue, they can be more profitable. If they become more profitable, then their stock price goes up. That's what the stock market does, man. It's made up of companies. But when interest rates are too high, a lot of those companies can't grow because they can't afford to borrow the money to invest in their growth. So they just sit there. Stock price doesn't really do much. So it's important that we understand how rates affect the stock market, right? That's real important for us to understand that how rates affect the stock market and how that affects us, right? That affects our ability to build wealth. It really does. So keep that in mind, guys, as we get these reports. Like I said, pay attention next week when the Fed meets for those 2 days. They're going to be meeting. Pay attention, right? Take time out to find out what's happening. Of course, you guys know I'm going to be doing videos, live streams every day, as long as my internet participates. I'm going to be doing live streams every day covering that, right? Covering all the topics that I can find that I believe are relevant to us building wealth, right? I'm going to continue to bring that content to you. And also one quick thing on my daily dose of crypto, because you guys know I love crypto. So I got to give you all a little daily dose of crypto. So Bitcoin, of course, is skyrocketing. I think the last time I looked at it, it was about $72,000 per coin. And of course, you know, they got this thing that's coming up they call the halving, where they're getting ready to basically just create more Bitcoin. Now, I know a lot of people, oh, no, it'll never be more than 21 million. The halving has nothing to do with increasing. I think it does. That's just my opinion. They're just creating more, right? They can and they are. They're going to continue doing that, right? And they're going to continue trying to drive up the price. So I heard a statistic. I was watching some financial channels this morning, and I heard a statistic that they said 90% of all of Bitcoin is in circulation. It's been mined. It's out there. 90% of it, and then they said 70% of it is not even exchanging hands. So who in the heck is buying Bitcoin if 70% of the people who own Bitcoin is not selling it? Who's buying it? Where's it coming from? You said 90% of it is in circulation. 70% of that 90%, no one's selling it. They're diamond handing it, or whatever they call it. Y'all know the terminology. What are they, hodling it or diamond handing it or whatever the little terminology they came up with. So where is the Bitcoin coming from? That's what I'm trying to figure out. They're saying 90% of it is in circulation of the 21 million. They said of the 21 million, 90% of it is in circulation. And 70% of that 90% is being held. No one is trading it. It's not they hold it on to it. So who's buying it? Where is it coming from? I'm just trying to figure that out. That's one of the things I got a problem with when it comes to Bitcoin and crypto is it's so much vagueness, so many missing pieces. I'm like, how can 90% of it be in circulation? 70% of it is not trading hands. So that means, I don't know. Help me out with that. Again, I think it's a Ponzi scheme. And I think, at some point, a lot of people get hurt by this because we're in the pump phase. And right now in this pump phase, that's dangerous because what happens is you got FOMO, right? You got FOMO that's been created. A lot of people have fear of missing out at these high, gigantic prices. Now, most of us are not going to be able to spend $72,000 for a whole coin, but a lot of us are going into these ETFs that BlackRock, Grayscale, ARK, some of these people have, these big old gigantic Wall Street firms have put together these ETF funds. Well, where are they getting it? Where are they getting it from? I saw one report that said Grayscale had about 550,000 Bitcoin. But I'm thinking, well, where are they getting it from if 70% of the Bitcoin is being held? I mean, how are they buying it? Where are they getting it from? Right? So now you got another halving coming up. So you take, I don't know, how many, I guess it'll never be more than 21 million. So I'm assuming you're just having that 21 million and just, yeah, it's just a little out there for me. All I can tell you guys is be careful. Whatever you're doing, it's your blueprint. If you believe Bitcoin gives you the opportunity to do what you got to do, go right ahead. I know some of these guys that I watched this morning, they were saying that, these big, large investment firms are now thinking that, okay, if Bitcoin is surging the way it's surging, maybe we introduce Bitcoin into some of our other asset classes. And I'm thinking, no, not none of mine. Don't. If Vanguard decides they want to put Bitcoin in one of my ETFs, I'm out. I'll just I'll sell my position and move on to something else because, see, that's greed though. That's greed because you got to remember, guys, these firms who hold all, you look at Vanguard, these guys hold almost $9 trillion under management. Almost 9 trillion, guys. Vanguard does. That's somebody else's money though. That's people like you and I. That's somebody else's money. So I don't want you put no Bitcoin, no 10% position, 15% position in Bitcoin in my ETF and what I'm in. I don't want that because I think it's a scam and it's a pump and dump. So I don't want, you slicing off 15% of the portfolio. You got 100% investments and 15% of it is sliced off into Bitcoin, something that's a pump and dump. Ain't nothing real about it. No, I don't believe it. So yeah, I thought that was interesting that they're saying these large investment firms now, because it's greed, right? It's just greed. You see what Bitcoin is doing. They're getting ready to have it again. Let's go ahead and increase our position. But not just put it into a Bitcoin ETF. Let's just take Bitcoin and just put it into our regular general S&P 500. Let's just put it into our regular general VGT. Let's put it into our total stock market. Let's just put it in there. No, I'm not gonna stick around for that. I'm gonna take my money and get up out of there and go somewhere else where I can put it that it doesn't have that much exposure to Bitcoin. Now, you can do whatever you want to because it's your financial plan. You don't have to do what I'm doing. I'm just telling you what I see starting to happen again, all over again from 2021. All over again, these people are out here pumping this thing. This thing is up to $72,000 a coin. They're predicting, some people are predicting $100,000 a coin before the end of this year. Matter of fact, real soon. Some people think it'll happen by June. Just out of thin air. Thin air. No reason for it, just thin air. It just, I don't know. It went from where it was in 2022 to here, less than 2 years, thin air. No one has any idea why. Some make-believe reason. Oh, the blockchain, or this, or that. No real reason. Nobody can give you a real reason why it did that. See, at least when you're buying a stock, you can point to a real reason. Okay, NVIDIA, why did it go from under $200 a share to $800 a share in less than 2 years? Why? Because NVIDIA makes something that people need. They make something that people actually use and need. See, they solve a problem for people. NVIDIA solves a problem that people have. They make something to solve a problem. That's why they grew the way they grow. I don't know why Bitcoin grew the way it grew. What problem did it solve? Please, somebody tell me in the chat, what problem did Bitcoin solve to make it worth what it is today? What problem is it solving? Please, somebody tell me. What problem is Bitcoin solving? How could it go from basically $17,000 per coin to $72,000 a coin in about a 2-year period, less than 2 years? What problem does it solve? Oh, it stores value. What the hell does that mean? Tell me what problem it solves. I don't know what no stores value means. Oh, you know what stores value means, guys? Whatever some sucker is willing to pay for it. That's what stores values means. Because nobody can tell you what problem it solved in order to grow from 17,000 to 72,000 a coin. What problem did it solve? Please tell me. Somebody help me. Come on now. I don't want to hear nothing about it stores value. All that means is I buy it for 72,000 and cross my fingers that some other sucker will pay 75,000 for it. That's what stores value means, guys. It means nothing. Tell me specifically what tangible thing happened, something that I can see, I can touch, I can feel, I can hear, something tangible that has happened to cause it to explode in value. Anybody. I don't want to hear nothing about no stores value. I don't want to hear nothing about no blockchain because nobody don't use the blockchain. I don't want to hear anything about it's going to be the preferred currency because nobody don't use it to buy nothing. What does it do? Please, what problem does it solve? Nobody has told me yet what problem it solves. Nobody can give me a tangible thing it does. See, I can give you a tangible thing for NVIDIA. I can give you a tangible thing for any stock that's going to the moon right now. I can give you something tangible. I can look at their income statement. I can look at their balance sheet and go down those two statements and tell you why they're doing what they're doing from a growth standpoint. You can't do that in Bitcoin. None of y'all can. All y'all can say is it stores value. And that's just code word for whatever some sucker is willing to pay me more than I paid for it. That stores value. That's all that is. See, even with gold, guys, I can take a gold bar and go anywhere in the world with that gold bar and I'm Gucci. I can't go anywhere in the world with Bitcoin and be nothing. I can't go and check in at the Ritz and pay with Bitcoin right now. What am I do? Give him my Bitcoin card? I can't do that. I can't do that. I can't go to my grocery store and pay with Bitcoin. I can't do that. Right? I can't do that. That's why I'm telling y'all, be careful out here with this Bitcoin thing. I'm telling you, It's shady. It's shady because ain't nobody in the chat can tell me one tangible. I'm not talking about intangibles, tangible. That means I need to be able to touch it. I need to be able to see it. I need to be able to hear it. I need to be able to feel it, smell it, something. But nobody can give me that. All I get is, it's a store of value. Basically, whatever some sucker's willing to pay me more than what I paid for it, that's the value right there. And how long do you think that's gonna last? How long y'all think that store of value gonna last before it crash and burn and dump? How long do you think it's gonna last? I'm just asking, guys. This is just a conversation. I'm giving you my opinion. Don't get all in your feelings. I know some of you guys, you love Bitcoin, and that's okay. Go ahead and love it. I have no problem with that. I'm asking a question. Tell me what problem does it solve? Tell me why it can go from 17,000 a coin to 72 and ain't done nothing. I don't know. But I can tell you that from the S&P 500. I can tell you why the S&P 500 grew and doubled in size in 10 years, because it has 500 of the top companies in America in it, and I can point to those companies that drive that growth. Can't do that with Bitcoin. Nobody can point to anything. It's all things you can't point to. It's a store of value. It's what someone's willing to pay for it. That sounds like a Ponzi scheme to me. That sounds like a 3-card Monty to me. I'm just telling you guys, that's just my opinion. You guys can do it what you will. But I do believe it will be a rug pull. I do believe at some point, it's going to dump. That's what I believe. I think it will dump. It will dump at some point. And I just feel bad for you guys who are up here at the peak buying this thing. I don't care if you're buying fractional shares. I don't care if you're in an ETF. I don't care if you're buying a whole coin. I just feel bad for you guys when this thing dumps, which it will. It will dump. Here we go again with this blockchain crap. Don't nobody use the blockchain, man. That had nothing to do with the block, please, man. You ain't heard nothing about the blockchain until Bitcoin started soaring again. And again, who uses the blockchain? Please tell me what common everyday person uses the blockchain. I'm not talking about some rich country or some billionaire or some tech guru or some, Bitcoin guru or these scammers on Bitcoin or these influencers who's rug pulling people. They use Bitcoin, but I don't know any real everyday down to earth people that use Bitcoin to transact business every day. I don't know any. Y'all help me out here. Who uses Bitcoin every day to transact business? Who uses the blockchain every day to transact business? Who? What business? What business can I go to right now? Can I go to Home Depot and use the blockchain? Please tell me. Can I go to Home Depot and use the blockchain right now? What can I go to Home Depot and get on the blockchain? What are they going to? They going to put my receipt on the blockchain? Can they do that today? Can they do that today? Can I go to Home Depot when I get done with this live? I go get in my car, go to Home Depot, buy me a bunch of stuff to do some improvements around my house. Can they put my receipt on the blockchain? And then can I go back to Home Depot with the crap I didn't need and exchange it and get a refund on the blockchain? Or are they going to refund me in Bitcoin? Can they put the Bitcoin back in my Bitcoin wallet or wherever y'all you use the? Can you do that? Can I do any of that? I don't know. Can I go to my local grocery store and get my receipt on the blockchain? Can I go to my local grocery store and pay with Bitcoin? I don't know. I'm just talking about the everyday stuff I do, guys. I'm not talking about buying some extravagant item when it's sexy to say I played with Bitcoin. Oh, I'm going to buy a Ferrari and I'm going to pay them with Bitcoin. Not that. I'm talking about everyday life. Give me one case study where you can use Bitcoin in everyday life. Somebody. I'm waiting. I got time. Y'all can click in and click out, but I got time. I got time. Somebody give me a case study, please. I'm waiting. I'm waiting. I ain't seen nothing yet other than a bunch of yapping. I don't see no case study. I don't see where nobody says, yep, I use it every single day. Here's where I use it. I conduct all my business with Bitcoin. Everything's on the blockchain. I have no need to bring anything with me other than my phone. Everything else, I don't need no credit cards. I don't need no ATM card. I don't have to go to no banks no more. I can pay my utility bills with it. I can pay my rent. I can pay my mortgage. I don't need any of that stuff anymore because all of it I use is on the blockchain and with Bitcoin. None. Of course you can't tell me. No one can. This is my point, guys. It goes from $17,000 a coin to $72,000 a coin in the matter of less than 2 years. There is no case study. There is no defined reason why. There is no application that I use in my daily life. For 99% of us, we don't. The only people I know who use these cryptocurrencies, for the most part, are people who are pump and dumping people, people who are scamming people, people who are trying to hide something. I don't want my identity known. I don't want this known. I want to be anonymous. Blah, 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 blah. You see what happened to your biggest crypto exchange company in the world, which was Binance. They just got hit with a $4 billion fine for doing what? Money laundering activities. I'm not saying they're allegations. It's just allegations. But they paid $4 billion fine. So it must have been some pretty strong allegations that they were tied to some illegal activity, guys. I'm just telling you. I'm not saying it's right. I'm not saying it's true. I'm just telling you what the allegations are and why they were hit with a $4 billion fine. I don't know. Y'all tell me. Normally people don't get hit with $4 billion fines unless there's something a little wobbly going on. So y'all tell me, that's your largest crypto exchange in the world, Binance. I think they got about 550,000 Bitcoin on the platform. I don't know, guys. Please be careful out there. I just don't see it. Honestly, I don't see it. I don't see what's going on. I don't understand how this thing went from $17,000 a coin to $72,000 a coin in less than 2 years when there is no practical application for it. There is no everyday life, no everyday usage of it in your life. I mean, the only reason people are buying it because they believe they can get rich. They believe I can buy it today and I'm gonna have some sucker 2 months from now that's gonna, if I buy that 72K today, I'm gonna find a sucker 2 months from now that might buy it for 100K and I get rich. And if that's the case study for it, just say that. Not all of this blockchain and it's gonna be a digital currency that's gonna take over the dollar and take the dollar out. It's bull crap. Just say, listen, it's a pump and dump. All I'm doing is I'm gonna buy that 72. I'm gonna hope I can find a sucker that'll buy it at 102 and I can make me 30 quick grand and I'm out. Just say that. Not all this crap about the blockchain. It's gonna take over the world. Just tell the truth. Just tell people the truth. All this crap about the blockchain and this and that. What? You don't even use it for the blockchain. There is no blockchain, as far as I'm concerned. I don't know nobody that use it. I've not did any transactions on the blockchain, ever. And the blockchain been out since what, 2009? Oh, when you buy a piece of real estate, everything's gonna be on the blockchain. There's gonna be no more need for documents. When you transfer the deed from one person to the next person, ownership, all of that's gonna be on the blockchain. You're not gonna need documents for anything. Everything's gonna be on the blockchain. See, that was the pitch back in 2021 that hyped it up the last time, right? And then guess what happened to you in 22? They rug pulled you. It dumped it on you in 22. See, they hyped it up in 21, dumped it on you in 22. Now all of a sudden it's being hyped again. Now what's the case for it? I don't really hear a lot of people talking about how it's going to take over the dollar anymore. I don't hear that. I heard a lot of that back in 2021. I don't hear much of that now because I think people understand it ain't finna take over the dollar anytime soon. Not in our lifetime. It ain't. Maybe 500 years from now it will, but not today. So you don't even hear people talking about that really anymore. You see a few people talking about the blockchain still. You got a few of them. Because you got to hang your hat on something and convince people that it's the future so they can invest, right? You got to find a sucker somewhere. I just hate to say that, but that's basically what it is. They're just looking for people who are FOMOing and catching those people while they're FOMOing, and that's it. That's what's happening. And again, if people would just come out and say that, hey, there ain't no real use for this thing other than what somebody will pay for it. So I'm just jumping in to make me some quick cash and I'm jumping out. If people would just say that, that would make it so much easier. But you know why people don't say that? Because that's not a strong enough case to make for the price to go up to 100,000 a coin. See, that ain't a strong enough case. If people know it's just a pump and dump, it ain't gonna have the same punch. So they gotta add some type of story to it to make it look more sexy, more exotic. It's scarcity. No one's gonna have it. Oh, it's gonna run the price up because only 21 million will ever be made. But every time I look around, they're having it. They did one back in 2020, I believe. Now they're doing another one. So how many times you gonna have it? I'm gonna keep having it, having it. How in the hell does that make it more scarce if you keep creating more of it? How does that make it more scarce when you keep creating more of it? That don't make it more scarce to me. I don't even know how it's being bought. If they're saying 70% of the people who got it don't sell it, how in the world are people buying it then? I don't know, man. Y'all tell me, help me out. Help me out with it, man. I'm confused. Somebody help me out. All right, man. I appreciate y'all. I'm going to get on out of here. I apologize about the weirdness with the internet. It was a little goofy. I don't know what the hell happened to the internet. My apologies on that. I think I just had a bad day because my internet is good. It's good. It's good internet. It's just today. I don't know if it was because I had my phone, because I got two phones. Maybe I had this phone and it was interfering kind of. Because as soon as I turned this phone off, I didn't really get any more weird stuff with it. So maybe it was the phone. I'm gonna have to check into that. But certainly appreciate y'all rocking with your boy. Remember, guys, if we want to build wealth, man, we got to know what's going on in this financial market. We got to know what's going on with the economy. We got to know what's going on with interest rates, and we got to know what's going on with inflation. We got to know all of these things if we're going to build wealth. And we got to stay away from crypto. And again, guys, that's my advice. You do whatever you want to do. My advice is stay away from crypto. Just stay away from it. Unless you're smart enough to say, okay, this ain't no real investment. This is just a pump and dump. I'm going to go ahead and jump in real quick, grab me a couple of them, keep them for about a month, 2 weeks, whatever. Catch this quick little 10,000, 20,000, 50,000 gain, boop, and I'm out of there. Long as you do that, you're gonna be fine. But you trying to keep this thing like it's gonna go to the moon and stay there and ain't never coming back to Earth, you're gonna be sadly mistaken because it's gonna dump. It's gonna dump. I'm just telling you. So if you just want to get in and make your little quick buck, do that. But don't sit around in it all too long, because if you sit there too long, you're gonna wake up one morning and it's gonna be $35,000 a coin overnight, just like that. And then, of course, it's downhill from there, and then you ain't gonna be able to get rid of it. So be careful out there for you Bitcoin guys and you crypto guys. Be careful, do your due diligence, understand what it really is. It's just a pump and dump. And if you can make some money and you're comfortable with that, knock yourself out. I personally wouldn't touch it with a 10-foot pole because I can't understand why it goes up in value and goes back down. It's just a pump and dump. That's the only thing I can, because I don't see any business case. I don't see any problem it really solves to create value. I don't see any of that. So keep that in mind. Do with that information what you will. Remember, March 20th, we got the Fed meeting. So next week, guys, pay attention. Of course, I'll give you my little 2 cents as the meetings unfold over a 2-day period. I'll give y'all my little 2 cents. But I think it's important that you dive in and learn what's going on too, and get some things. And whatever you hear them say you don't understand, write it down. And then just go to the $1 billion research lab, type that in, and it'll tell you what that means. That's all you got to do. If you hear something that I say or anybody say, write it down, make a note of it, and then go to the $1 trillion research lab and go ahead and research it. Stick it into the search bar and figure out what that terminology means, right? That's what I would recommend that you guys do. If you do that, I think you give yourself a chance to really increase your knowledge. But while you're increasing your knowledge, be taking action, right? Be buying assets, traditional assets that actually have a historical track record of building wealth and has a tangible reason why they grow in value. There is no, because the next guy will pay me more. They have a real reason. Why does the S&P 500 increase in value? Because it has the top 500 companies in America in it. All big boys, all blue chip, all produce stuff, products, services. See, they produce stuff that solve problems for people. That's why it grows. Not under this crazy crap where we don't know why it grow, it just grow. It's a store of value. Why do you invest in S&P 500? It's a store of value. No, it grows because it has companies in there that make products and services. And as those companies grow and become more profitable, their stock price becomes more profitable. More people want to buy into those companies because of that profitability. They want a piece of it, whether it be through dividends or whether it be through organic appreciation of the stock price. That's why the S&P 500 is the 900-pound gorilla. And that's why I invest in it. It's tangible. I know who NVIDIA is. I know who Tesla is. I know who Walmart is. I know who CVS is. I know who Home Depot is. See, I know who these companies are. I use them every day. That's why the S&P 500 grows. You can't say that about Bitcoin. No one knows anything about Bitcoin. Y'all don't even know the name of the guy who actually come up with this crazy Ponzi scheme. Y'all don't even know who he is. You've never seen him. He's never did an interview. He owns 1.1 million of these things. He's worth $76 billion and no one has ever seen him. But that's where you want to put your money. That ain't that guy's real name. That's some con artist name. Satoshi Nakamoto or whatever. That ain't his real name. For all you guys know, it could have been created by one of these Wall Street banks or one of these Wall Street firms, for all y'all know. It could be created by some snotty-nosed kid in some obscure place in the world, for all y'all know. Y'all don't know because you've never seen the guy. You've never seen the guy. You don't know. You have no idea who you're investing in or what you're investing in. You're just FOMOing. Stop FOMOing and get in a real investment that's going to build wealth for you long term. If you want up to 15 free stocks, Moomoo is going to give you up to 15 free stocks. When you open up a new Moomoo brokerage account, put $100 in there, they're going to give you 5 free stocks. You put $1,000 in your Moomoo account, they're going to give you 15 free stocks. Guys, click on that link down in the description box. That is the brokerage app that I use to buy real traditional assets that actually build wealth. Not none of this other stuff. No, real assets. Real tangible assets that actually build wealth. S&P 500, Information Technology ETF, Magnificent 7. Those 3 big boy investments, blue chip investments, that's what I buy. That's what I'm going to buy over the next 10 years to transform my wealth and my net worth into more. I'm going to double it, matter of fact. That's what I believe with those 3 big boy assets. Huge historical track record. Huge. Go look them up. Now, if you want to know exactly what those 3 investments are, send me an email. Just go down to the description box, click on not click on it, but you'll see my email address down there. Send me an email and say, hey, Richard, I saw your video, and send me those 3 big boy blue chip assets, traditional paper assets that you're buying in your Moo account to double your net worth over the next 10 years. I'd like to see those, and I'll send you that video outlining those 3 big investments. Big boy investments though, guys. Big boy investments. I will send you that. Now, again, you don't have to copy my plan. You're more than welcome to copy my plan, because I believe my plan is a really, really good plan based on 25 years of investing on my own. I'm not a CPA. I'm not a CFP. I'm not a trained financial advisor. I'm none of that stuff. I'm just a guy who did this for 25 years on his own, investing in big boy blue chip paper assets to get to wealth. And I'm going to double it in the next 10 years. I'm going to double what it took me 25 years to create. I'm going to double that in the next 10 years using these 3 big boy assets on my Moo account. So if you want to rock with that, like I said, open the Moo account, put you some money in it, get you some free stocks, and then send me an email and say, hey, Richard, I opened my Moo account like you recommended, and just send me that video with them 3 big boy blue chip traditional paper assets that you're going to be buying over the next 10 years to double your net worth. I'd like to take a look at those. You ain't got to copy my plan, but take a look at them. See what you think. Go do a little research. Go to the $1 trillion research lab, punch them in, and poof, there you go. You're going to be able to do your own homework and figure out for yourself if they're real or not. That's what I would recommend that you do. Again, guys, no expert here, not trying to be an expert. Don't know everything, don't want to know everything. Only thing I want to know is one thing. How do I double my net worth in the next 10 years? That's all I want to know. And I've already told you what I'm going to do. Now, I don't know what you're trying to get accomplished in your financial life, but figure it out. Figure it out, guys. Time's running out. Time is running out for a lot of us. See, I'm 56 years old. Time's running out. And I know a lot of y'all out there who watch me are my age or older. Clock's ticking. And some of you young folks, you think you got all the time in the world, but I'm going to tell you guys, it goes quick. You know, you're 25 years old. You're going to go to bed one night and wake up. You're going to be 35. Just like that. 10 years going to go by so quick. And then when you're 35, you're going to go to bed and wake up. You're going to be 55. Just like that. You're going to be like, goodness gracious, what have I been doing? Oh, I just been partying and having a good time and pleasuring myself and indulging myself and spending money to make the 1% wealthy and not building any wealth. I'm telling you guys, you better buckle down right now. I'm telling you, no greater time in the history of making money than right now to make money. But you got to make the decision to go make it. Y'all know how I am on this channel. I'm going to tell you the truth. I'm going to tell you what's real. Whether you take it or believe it or not, that's on you. I can't make you believe anything. Don't want to make you believe it. I'm not a convince you channel. I'm just an opinion channel. But I've seen this, guys. You guys got to understand, I've been doing this for 25 years. I was in banking, retail and commercial banking for 25 years. I've seen it all. I've seen all the people's tax returns. I've seen all their credit scores. All these people, these thousands of people I've worked with over my 25 years in banking. I've seen the good, the bad, the ugly. The good, the bad, the ugly, guys. And guess what? At one point, I was in the ugly category because I had jacked up credit, no net worth, no job. 26 years old. That's where I started, in the ugly. And I just worked my way up, right? I just kept ugly, bad, good, and then excellent, right? I just worked my way up over 25 years, got it done. Nobody, I didn't make no excuses. Oh, I'm waiting on somebody to do it for me. Nope, nobody gonna do it for you. You gotta do it, but that's up to you. That's up to you. The goal here is to get you to your pot of gold at the end of the rainbow. That's the goal. That's the key. And I've just given you some information today that hopefully you'll take some of that information and apply it to your financial life. And hopefully you will understand that it's better to delay gratification today, take the money that you're earning, put it in assets that will grow over time, and then you're able to do anything and everything you want to do in this life. But you got to give up something in the short term to get everything you want in the long term. That's how it works. There is no, oh, I'm not going to give up anything, Richard, but I plan on having everything in the long. No. See, that's the matrix. That's the matrix you're in right now. That's you caught up in the matrix. That's how they got you thinking. You can have your cake and eat it too. Oh, you just make this money, spend it on things, have a good time, enjoy your life. Tomorrow's not promised to you. That's the matrix. Over here is where real wealth is as an investor. Over here is nothing but debt and liabilities. Over here is assets and wealth. You choose which one you want to be in. Assets and wealth, or debt and liabilities. Paycheck to paycheck, high interest rate credit card debt, etc. So you got to choose, guys. It's up to you, but choose wisely. Choose wisely. Well, guys, lock it in with a thumbs up. Getting ready to get out of here. Thank you, guys, for sticking in there with me. That stuck in there with me. I know we had some internet problems. My internet was a little spotty today. I apologize about that. I'm gonna have to check on that. I think it was just a glitch today because I've never had that problem really before. And I appreciate whoever stuck around and just kind of got through that with me. I appreciate it. It means a lot. So please lock it in with a thumbs up before you get out of here if you appreciate the content. If you appreciate the information that I provided to you today on the Fed, on the CPI inflation report, and then certainly my daily dose of crypto. I know some of y'all can appreciate it, some of y'all don't, but that was my daily dose of crypto. And then we talked a little bit about Vanguard. I had more on Vanguard, but my internet was starting to get spotty, and all my information was on my phone, and I had to turn the phone off so I could get a little bit better internet. So appreciate y'all though, man. Thank you so much for stopping in, rocking with me. And then, of course, guys, I'll be back tomorrow, hopefully with better internet. Hopefully you guys will tap back in at 10:30 tomorrow morning, Eastern time. And then this afternoon, I'm going to be putting out some more content this afternoon, but it's going to be edited content, so won't have no internet problems with that. But again, man, I appreciate y'all rocking with me. And until tomorrow, man, lock it in with a thumbs up before you get out of here. Again, if you want that Moo offer for the free stocks, up to 15 free stocks, go down to the description box, click on that first link, which is the Moo link. Sign up, guys. Put some money in the account. Send me an email. Let me know you've done it. And then I'm going to send you that wealth transfer blueprint video so that you got an idea of exactly what I'm doing to build wealth using my Moo account. So thank you very much, guys. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. And I'll catch you guys on the next one. Peace.